Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on, of course, helping understand best practice and big picture. And yes, I am back in my office, back home, in the comforts of my, whatever you want to call it. It's just super nice to be back, and I appreciate your patience with me and all the traveling that I had to do. But it was good to see family and kind of get caught up with all that stuff. Anyways, what we're going to be taking a look at here today is pretty straightforward standard stuff, but also some big picture stuff too. Kind of helps see not only why this happened, but more importantly, what can we do to either A, prevent it from happening in the future, or just in general, will it happen again? A lot of things we want to try to answer here, of course. And it's going to be difficult to speculate, a 10% correction is going to happen tomorrow, right? Because that's really, it is very random and odd for it to have done that much so quick. But again, there was a lot of strong pushes to the downside. I think there was one minute candle that was just crazy and chaotic. So we're going to take a look at that and much more, okay? All right, so if you're new to the channel, not a financial advisor, love to teach people trade, I hope you can learn something here today. And if you do, comment below, feel free to let me know. And if you want to become a better trader, CryptoCache.tech is a site. I have a trading academy, teach you to become a little bit more efficient, I would say. Majority of my graduates, they actually say that they've turned out to be much better, more conservative traders. And again, I'm more on the conservative side. And I think that's a good thing to be, specifically in a market like this where we see a 10% correction in a very short amount of time. So again, that's kind of where we're at there for the overall sense of Bitcoin here. Let's go ahead and take a look at the closer stuff, of course. Actually, no, big pictures first, and then we'll go take a look at the smaller stuff later. So let's take a quick look at the monthly and see where we're at. So as I was expecting for us to close this month green. We could still see that, keep that in mind. But bear in mind, September's notoriously a red month. Okay, so it's specifically a red month in most cases. I think the average likelihood of that's like 70-80%. It's pretty high. Now, are we going to close red or green this month? It's hard to say specifically, but if we close below the 50-day sub-moving average, then I think there's a probability we're going to stay under that for perhaps a little bit longer. Again, next month should be telling in the sense that we should be able to see the price action come down. Between now and then, we got to just recognize and acknowledge here that we are back below the 50-day sub-moving average while the month still has 10 days left or 11 days. We're basically at this point where it's tentatively unfortunate or negative, but this hasn't closed yet, right? So we're not in dire straits or bad shape. But the thing we do also need to recognize here is also the fact that the price action hasn't recovered above 50. Now, when we were up closer to about 25,000, it was breaching 50 on the RSI. A closure above 25,000 would pretty much put us there. But for right now, trending right around 21,000, we can see the price action kind of staying sideways and that we're still stuck under 50, kind of reiterating the fact that we are potentially bearish over the next couple of months. Okay, and that's just something we kind of want to come to terms with. So again, the possibility of 14, 15,000 right in that range could still happen if we lose 19.8 or just say 20,000 as a round number. Okay, so I would say a point of contention is 20,000. Ideally, we want to stay above that. That'd be a good thing to start with. But I need to say the monthly doesn't look great, but the month isn't over, right? We're 2/3 of the way in. Weekly, we have a different narrative here. We were working with the 200-day moving average previously, and it was working as a support level. Now, tentatively, it is not. Again, I say tentative because we've got 1 day left in this candlestick, but the likelihood of it's pretty high that it's going to close below that moving average, right? So again, that's notoriously not a great thing. We had a good 3 weeks where we had some decent continuation of the upside, but now that instant reset button that was hit kind of puts us in a different perspective here to just kind of anticipate that we are still potentially bearish on the shorter and longer time frames. Okay, now taking a look, of course, at the RSI, hypothetically we should bounce off 30 on the RSI, and that could put us right in the 20,000 range. So it seems likely that 20,000 could be the bottom if it were to come down to retest like the 19.8 range. Okay, so again, 19,800 is essentially the key level support from previous time frames. All right. So that's essentially where we're at there on the weekly. Not fantastic by any stretch. So don't fool yourself here. We're not in great shape whatsoever on the weekly. We lost the one moving average that we needed to kind of help sustain. Now, it doesn't mean the price is going to keep dropping another 10%, okay, or 20 whatever percent we see. That could happen eventually. Don't get me wrong, but it's not that we shouldn't experience that again immediately. Okay, so just bear that in mind. But the likelihood of the price staying below the 200-day set moving average now is quite high. So 23,000 will be a new resistance. Okay, so there's a decent chance of that happening now. And for all of you who are in the same trade that we took a couple days ago, yeah, while it's very unfortunate the price came down and we didn't hit our trailing stop loss, the important thing to recognize is that we're using small position sizes, and that's the important thing there, because the likelihood of Bitcoin recovering is still very high. Okay, even if we spend the next couple of months under that moving average of 23,000, it'll inevitably break back up above. It's just a matter of time. And again, I feel like November, December, that time frame there, we're going to see some pretty awesome stuff from Bitcoin. But between now and then, we can expect a little bit more red. All right, so let's take a look at the daily and kind of see what's going on here. Taking a look at the moving averages, just to kind of touch on this, we did lose both 50 and the 20-day set moving average, and the 200 is trailing behind, of course, at about 32,000. We're not going to see the 200 tested for quite some time, but it is very unfortunate we lost the 50-day set moving average. That was supposed to be a support level, and it didn't hold at all. A lot of that has to do with market manipulation. We'll look at the smaller time frames to identify that, but generally speaking, when you have that kind of manipulation, it's just the rest is going to fall, right? And you can't anticipate that kind of behavior because obviously the price action was testing some key level supports and it broke and lost that. In fact, what we probably saw was a long squeeze, which sounds weird, but it does still happen, whereas a lot of longs got liquidated and it was just a search for those longs. In other words, well, I think at one point at a specific price point of maybe 22,000, 22,001, right where we're supposed to have some support level at the 50-day set moving average, there was like 2 or 3 million contracts that got liquidated. And it's just, it's very normal for this to happen, unfortunately, because they're laughing all the way to the bank and we're stuck in a higher position getting kind of screwed over. So again, it sucks. That's the way that cryptocurrency has and will probably likely always be until regulations come into place. But generally speaking, we're not in fantastic shape there. So let's take a look at some of the other things too. Some good news here, essentially, because again, it's less likely for the price to come below 30, which can still happen. Keep that in mind. But again, we didn't bounce off of 30, we bounced off 32. But hypothetically, we're close to the bottom for the moment. So even if we come up and get rejected off of 50 on the RSI, we'll still be in a position whereas the price action will potentially increase between now and the next few days, right? So again, in that sense, from strictly a bouncing perspective, there is more likelihood the price coming up than down based on that sentiment. Again, you don't want to base your analysis specifically on one thing, but that's kind of a positive that we came close to 30 and essentially we're staying above it. All right. So again, just something to note, does not mean we're not going to see a price point lower. It just implies that the likelihood is less. Same here with the MACD as well. We see a strong MACD divergence on the 16th of August, kind of foreshadowing the price action coming down. Now again, we've had a lot of false positives in the recent past, and the bottom line is that this was much more aggressive than it should have been. However, it is still relevant in the sense that the bears are picking up momentum, and we could see this continue further, especially if you kind of see the previous time frames. Granted, these are massive, like 10 to 20% corrections, but it's still very possible the price action could come lower. Okay. So again, so the summary here on the daily is that we're below specific key level resistances, or previous supports rather. They're now resistances, and we only have the 50-day, or sorry, the 30 on the RSI as a potential saving grace. So again, more likely downside than upside at this point. Like, just kind of based on what we're seeing here so far. Looking at the 4-hour, we're below all moving averages. That's pretty obvious. We're well into 30 on the RSI. This is extremely overextended. This should not have happened. But again, this candlestick here, this what I think was like a 5 or 6% correction in only like 5 minutes is just, it's uncommon. Because if we take a look at the volume here, we can see there was a significant spike in volume in that time frame. And you can see it a little bit better in the smaller time frames. We'll look at that next year, but what I want to kind of show here is that the MACD is starting to recover a little bit. So in other words, the bears are losing momentum. Not saying by any stretch it's just going to bounce and recover, but this is positive in a small way because we could very well see a convergence in the price action, bounce back up to possibly, again, the 23,000 range. Keep in mind, based on the larger time frame moving averages, right around 23,000 is a point in which we could see some resistance if the price were to come back up there. All right. So just note that if we were to get a little bit of a bounce, it may possibly be one of those dead cat bounces and effectively a strong sell-off to follow. But at this point, we're extremely overextended on every stretch or every sense here. And it's just one of those things where it's just fairly obvious that we're extremely divergent right now and bearish. Okay, again, it's not going to just shoot down 10% tomorrow or on Monday. I don't think that's a strong likelihood, but that is a possibility. Another thing to recognize too is that we had a significant gap down and some massive red days on, or red candles essentially, you could say. And it may not seem like a lot, keep this in mind, but a 2% correction for NASDAQ and just say a 1.5% correction from the S&P and the dollar index going up, those are all factors that push Bitcoin prices down. Okay. There's a lot of stuff going on in the world right now too that's affecting the overall price action, and I think that has a lot to do with it too. So feel free to check on some fundamental stuff that's going on in the world. If you're watching the news, there's a lot of stuff, and it's unfortunate, but that drives the price down. And because again, not saying we're in a recession right now, but if we were to effectively get into one, Bitcoin's never experienced this before. So a lot of the 4-year cycles are not really coming to place, if you will, because the world is so much more upside down now than it was a few years ago. Okay, so again, Bitcoin is still new to this type of market, and the market right now is not really a good one in the overall sense of things. Even though we did see a slight recovery recently, Bitcoin's correcting itself as it should with the traditional markets. Last thing to kind of summarize here is the hourly. Let's kind of see what's going on here. So let's just focus really quick on this one candle. I mean, you see we had just kind of normal average volume, and then it shot up straight from there, and ever since then it has been trying to recover. So again, it's one of those things where it just really I'm sure like a lot of longs got squeezed out right at this 22,000 range, and then the price just continued. What I want to look at really quick, just out of curiosity, because I think actually let's go with the 5 minute, probably be a little easier to see. So in this 5 minute time frame, take a look at that volume there. We saw a correction of just around down 5%. Now, it may not seem like a lot, but a 5% correction in 5 minutes is insane, okay? And that causes this constant sell-off here because everyone freaked out and they started to sell off as the price came down to try to get out before it got worse. Okay, so that's a very standard thing, but unfortunately that one small time frame there, literally I think there was a 1 minute candle in this area that really just jacked everything up. Okay, so in 2 minutes we saw that 5% correction. Okay, so it wasn't even 5 minutes, it was 2 minutes. So again, that's complete market manipulation, and I'm not saying and pointing the fingers that this is the reason for this downside, right? The downtrend started a few days ago, but it should not have corrected itself this much in that amount of time. That is complete manipulation, and it's unfortunate that we see this, but it's very common in crypto. So again, all the more reason for you to kind of respect the market, if you will, and to make sure that if you don't have a stop loss, you're using small position sizes. Again, we use a trailing stop loss, and sometimes the trade will stay open a little bit longer. But the main reason why that still is effective is because you use small position sizes and you'll eventually get to your goal. Right now, obviously, the price action is decreasing, and it's unfortunate, but the long story short here is that you want to protect yourself, right? Protect your investment. So stop loss is the first thing you want to do. But second to that, if you don't use one, ensure you're using small position sizes so the price does come back down. You can hold on to that and allow for it to recover. Because I can assure you, Bitcoin will retest the 22,700 range again. It'll retest 23,000 again. It may not be this week, perhaps, but it will be likely in the relative near future, next couple of months, right? So again, depending on how your overall position sizing is, if you're position sizing effectively, this shouldn't have been a big deal. All right. Again, I'm not super worried about it, but I have a lot of some very small trades open, and I'm perfectly fine by that. It fits my trading style. So if you're more of a day trader, absolutely always use a stop loss. But if you like the swing trade aspect of things and maybe less stress, then just go ahead and use small position sizes and continue to take safe trades. Again, this doesn't look very safe, does it? So you got to protect yourself. All right. Anyways, just kind of some friendly advice there. Last thing we want to kind of look at here would be the cloud. So this is basically just telling us, and again, there's no guarantees here, but the lagging span coming in to play with the price action and the conversion line being back up above the baseline. Even though we're still under the upper and lower lead on the cloud, we can still see here that the probability of the price action coming lower is losing momentum, right? That's basically the bottom line. Now, again, a lot of this has to do with this being a weekend, right? The last 12 hours or so, we haven't seen a tremendous amount of volume, and there hasn't been a lot of price action. That's normal for the weekend. So it's really hard to say specifically what's going to happen, but the thing to recognize is just that the momentum is losing, right? So the bearish momentum is waning, and there's a possibility we might see a potential push up to the upside in the relative near future. And what I mean by that is it's going to take a little while, right? I mean, like, we literally have to be back up above the cloud to have any confirmation. So, don't take a long position right now just based on the fact that it's telling you to close your short position. That's never something you want to do. But in the overall sense of things, you could have some success, maybe just shooting up to the 21.6 or 21.7 range, because that's, again, a Fibonacci retracement level of about 21.7. So again, that's kind of where we're at there on the hourly. Let's take a look at TD sequential and kind of see. We came all the way down to a 9, got a 2-hour correction to the upside, and we're right back down to a 7, and then came up to a 6. So the simple way to understand this is that the 9 on TD sequential kind of told us that we hit our bottom after 9 hours, right? First insane 1-hour candle, and then of course 9 to follow, right? So again, the price should average itself out kind of where it's at. We might be range bound between 20,800 and 21,700, but it's really hard to say on the weekends. Honestly, it's just kind of a crapshoot. That's why I don't really like to open trades on the weekends. It's less likely you're going to hit your targets, but generally speaking, at this point, we should experience the price action at the very least going sideways this weekend. And then Monday, of course, depending on the traditional markets, if the traditional markets do open in a gap down, dollar index is up, we can expect more downside from Bitcoin. So we probably want to take a look at NASDAQ and S&P futures and kind of see what that's looking like on Sunday evening, and perhaps use that as a potential gauge, I guess you could say, because that has a lot to do with it. It wasn't specifically the reason for this 1-hour candle, but it was absolutely a factor involved in the overall sense of things. Okay. Again, there's a lot of handful of things that's kind of are all part of the overall equation here. So again, when it comes to technical analysis, there's definitely no guarantees, but it can be one of those things where you increase your odds or your likelihood of success if you are just, again, being fairly thorough and looking at every time frame. And we disseminated now here so far that it's a more likelihood the price will come down than it will up in the overall sense of what we're seeing. Okay, there's small little potential turnarounds that we're seeing right now, but those are not relevant enough on a weekend specifically to warrant a long position. Okay, not saying you should short. Of course, I typically don't recommend shorting because it's more risky, but in general, a short does seem a little bit more viable. But I would recommend possibly waiting another 48 hours to kind of see where the market starts averaging itself out. So that's overall where we're at here so far. I mean, I would say that's the weekend forecast for Bitcoin. Just completely garbage in a lot of ways. And I hate to be pessimistic, that's totally not the goal. But, in truth, this is not fantastic. And, we do have some strong resistance levels above us right now. So I would recommend being cautious and careful. And just to quickly touch on this too, a previous support level, or previous resistance rather, was right at the 21,600 range. So if we extend that out, we can kind of see that could be a point of contention too. If the price tries to come back up, it could get rejected off that level. So a potential short opportunity would be closer to 21.6, just based on that sentiment as well. All right, so that's pretty much everything we got here so far. I think you are more likely to have better success on the way down right now than you are the way up. Just kind of what it feels like. There are some altcoins I'm taking a look at that I want to make sure to evaluate, of course, as quickly looking at them yesterday. And there are some really good short opportunities for some overextended coins right now. Okay, so we're going to take a look at that as well. I'm more so speaking to my community regarding the signals. Of course, there's some alts that I'm considering opening position with. All right, so that's kind of where we're at there. Once again, 19,800 is a point of contention. We come below that level, we have to have a different conversation. Between now and then, it will probably be stuck between 19.8 and 21.6. It just seems like that's kind of the area that we should expect some range in motion here. Okay. All right. So hopefully that made sense for you, and that makes clarified some things. Thanks once again for your patience and all the wonderful audio quality we've dealt with over the last 2 weeks. So that's the thing of the past. I'm back on down. All good now. You'll see a lot more consistency here from my end, and I greatly appreciate your patience. All right, Joe. Hope you have a great rest of your day. We'll see you in the next one. You take care.